All righty. So, Steve and Andy, how is the Monday going? I mean, Tuesday
Yeah, thank
going.
you, Scott. Yes, the days kind of run together around here. Um, nice day here in San Diego. How's it going over there in Texas, Andy?
Oh, it's nice. It's cooled down quite a bit. I enjoy that. Hello, Scott.
Yeah.
Hi, everybody.
All right, and welcome Trade Ideas users. And let me add a new wrinkle. Welcome to E-Trade users who are wondering what the heck happened to their strategy scanner. Um, More to come on that, but we were the engine behind that. So if you've been directed over to Trade Ideas for a standalone subscription, welcome, and feel free to ask a question if you're one of those. We're here to help. All right, so let's get started. It looks like Chris is actually streaming this on the YouTube channel as well. So let's just get into the slides and the disclaimers. Reminder that we are a software as a subscription company, and nothing should be construed that you see or hear today as investment advice. We're not licensed to give that out professionally, but we are allowed to just give out our opinion, and that's what we're going to have, a couple of opinions, longtime users of Trade Ideas and longtime traders of the market. So as we mentioned, Trade Ideas has been on my screen and Andy's screen for about 17 years. It's second nature to us now, but we realize new users don't necessarily have that knowledge, and it's not something you can really pick up in just a few days. Once you figure out how to speak to the platform and get what you want to get out of it, whether it's long-term swing trading or short-term micro scalping, you can do it using Trade Ideas. You just got to kind of figure out how to tweak it and talk to it. So we try and help people as much as we can learn and shorten the learning curve, starting with the live trading room that Barry has each day, bell to bell. He pretty much takes off maybe an hour before the end of the day because there's just not much going on there at the end of the day, especially if you're a day trader. The afternoon webinars, such as you're listening and hearing right now, and then the daily support sessions, we call at the bottom there. Let's move into that. That is trade-ideas.com/live. That is the redirect to the live stream on YouTube. But more importantly, it's either myself or Andy and Jamie, Michael, Chris now, and Sean. Users, longtime traders, and employees of Trade Ideas take over for Barry at the noon hour and give you guys just kind of a different flavor, different view of how we use the product, and more importantly, make ourselves available for people for customer support. You might have been told many times, if you can just travel over there to the noon hour, it's much more effective than emails and phone calls because we really don't even do any technical support over the phone. So that's the URL for the live room and also the daily support session. So as we get into this week's content, just the kickoff and the reminder that it's a two-pronged endeavor in today's age. We need machines. We rely on machines, but it's a symbiotic relationship. We can't rely solely on the machine, whether it's healthcare or finance or whatever you want to call it. The human touch is still needed. The nuance of the human touch. I was discussing that with Brian Shannon, who I actually stole this slide from the other day. He's never been sold on full auto trading, and I'm not either, because we both agree that the human brain can take in the nuances in real time of all the information out there better than a machine can. But a machine, in our case, can certainly help us find some great setups in real time, and then we just kind of take it from there. So that's the human and the machine approach as it applies to Trade Ideas. All right. So here's our agenda for today. We usually go till about 45 minutes after the top of the hour. I'll discuss the market recap today. I think there's a lot of interesting things going on. We'll spend a little time. It's kind of a rehash from Jamie's webinar last week, or yesterday, I should say. AI recap, a lot going on over there today. I think Andy can find a couple of gems. The trade of the week, working again, but I've got a lot to say about it. A lot to say about that and how it was traded over here in my accounts. And then we're going to just kind of move on to pass something out, hand something out, especially there's a lot of new users, I think, from the test drive that we had last week. And if people are ready to go and start looking at some new scans and bringing up some new ideas, I'm going to try and sell you on the fact that the trade of the week has done pretty well the last few months. And so what we're going to do is, this is Andy's idea, and I appreciate the content idea for the day, because it's a good one and it's a good timely moment to revisit the well from which we've been drawing these trade of the weeks. And we'll talk about them and we'll pass them out and share them. And we'll even maybe set up a few alerts if we can see some. And then always we finish off the 45-minute session with some chart requests. It's always interesting to learn and see what other people are looking at and put it through the filter of myself and Andy. So with that said, we'll start into the first segment here, which is our broadest look of the S&P. I'm going to do a couple things here. Now, I'm going to start off like yesterday and telling everybody this is about as bullish and beautiful as it looks. We've been doing many Tuesday webinars along this long trend line we've been following. We've seen many setups just like this. And I always say the same thing. It's, boy, you really can't make a bear case at all here. We're flying in clean air above all the moving averages. It's just as bullish as can be, and I hope you're not short. And that's okay if you want to look at the market through this little frame right there. I mean, that's about as bullish as it gets. Pretty cool, but I want to just start to maybe give you a few other thoughts. One, how far have we come? We have come very far. Almost, I think, I'm just eyeballing it, about a 70% move off of the lows, with that also being part of this year's high there. Quite the wild range. And, at some point, even the best of airplanes kind of lose enough airspeed to where their wings start to buffet and they nose down. And I'll tell you, it's no fun to be in that situation when the market does a nose down stall. The market opens up about 1.5 points down, and then before you even know it, you can't get out of your stuff fast enough and your systems lock up and everybody's trying to get out at the same time. That's no fun at all when everybody's running for the fire escapes in a burning building. Now, I'm not predicting that, but I'm going to put a few cases out here, and I'm also going to overlay the fact that my trader's gut of 20, 25 years is just starting to knock on me a little bit. One, I don't know about you guys, but November was a pretty good month if you were playing the small caps and the electric vehicles and the things that were just going like crazy. And it's one of the better months I've had in a while. And every good seasoned grizzled trader knows that when you have it too easy, and I'm not saying the market's easy or trading's easy, I'm just saying that last month was probably about as easy as this business will give if you were on the right stuff. But there's an old axiom that pretty much says, be careful when it starts getting that easy, because you get complacent, you start getting too confident, you start breaking rules. And I've got some great dovetails, trust me, of how I've botched a few trades myself coming up. We'll talk about that. But what I want to put out is that, yes, the market looks great right here, but we've come a long way. And at some point, all trends do have to reverse, okay? It's been very easy. So we got those two things. We've come a long way. It's been pretty easy the last month. And again, I'm going to pull up the IWM just to remind people that's where the action was. But as good as this looks, I'm going to give Michael credit this weekend, and we'll dovetail into that again. But he brought up a point. I was looking at a couple of trade of the weeks, and I passed him around, and Michael came back with some very good feedback. And I'll get to that specifically. But he reminded me that there's an indicator out there that can show bearish divergence, and bearish divergence is probably about the best indicator you can use to try and gauge and see, is this airplane running out of airspeed over the wings? Or are we about to start to buffet and maybe point down? Let's take a look. It's called the RSI, Relative Strength Indicator. We'll just go ahead and add it here. And we will open it up a little bit. And this is normal behavior, new high in the price, and a nice new high in the UMPH, the UMPH I'm calling it, the underpinning strength underneath that move. That was a really strong move. It finished strong on the RSI with a higher high. But when you have another move, which is kind of a soft, flatter move, but still nonetheless higher in price, this just stares me right in the face and starts, the red alarm, alert, warning, caution, whatever you want to say. I've been around too long enough to see that this is not the type of environment that you want to start pressing your account 80% invested as a swing trader, 90%, because there can be a day when you wake up and the only real indicator you had to give you a thought that that was possible would be something like this. Now, again, I am not predicting. I'm just saying these are some of the things that I'm having concern with right now that I'm seeing in the market. So therefore, last week, I was 80, 90% invested in my swing account. As of today, I'm about 15%, 85 cash and maybe 15%. And in the other accounts that I can trade, I picked up a VXX position. Let's just add that as the fourth wrinkle today that makes me a little concerned. I'm glad I thought about that. And if I didn't, I'm sure Andy would have reminded me. The fourth wrinkle that concerns me is what happened today in the VIX. Let's get rid of the RSI. So we're going to move to the intraday. As you see, we had a nice gap up in the SPY and the Q, same thing, gapped up, went to the highs and pretty much closed. Just a little simple little doji. But when we look at the SPY, they were up, 1% on the day. Okay, interesting. Well, as you all know, the VIX or the VXX ETF is a fear gauge. And when the markets are up, there's no fear. But why in the hell was the VIX up 1% this morning when the S&P was also up 1%? We're starting to get some real conflicting signals here. This can happen sometimes as another early warning tell of things about ready to shift. And again, I'm not predicting, I'm just putting out some warning cases there and telling you what my gut is telling me. I'm light, very light, big on cash, and I'm watching, and I'm actually taking a position in this VIX just in case the market does break. Why not participate? I've already calculated my loss in the sand. I'll risk, a few $100 on it, and if it doesn't work, it doesn't work. But a lot of things to kind of take away the beautiful pattern that we have here. So we can't always just get focused on the last 5 days and the last pattern. There's a bigger picture, and that's really what I wanted to kind of harken on today, those 3 or 4 warning signals. What do you think, Andy? Am I making sense to even the newbies out there?
No, absolutely, you're making sense. And I remember when you and over the weekend in our Slack, you and Michael talking about that divergence, and I definitely was watching that. And then I always keep an eye on the VIX for that same reason. And like Steve, I actually took a position in SDSs today. Pretty much, I mean, barely in the money right now. It didn't get a move, obviously, if the SPYs have to move. But at the same time, yeah, anytime I see the VIX decoupling from the SPYs, what I mean by that is, and when it goes up along with the SPYs, that tells you people are getting a little bit nervous. They're buying protection. So that can be a precursor to a sell-off. And I've seen it. I just say this: many more times than not, it's followed by a sell-off. But like Steve, I'm not telling you to sell everything and get short. I'm not going to do that. But it is a time to be cautious when you start seeing little signs like this. So, but other than that, yeah, just stepping back and looking at the footprints in the sand and the SPYs. Yeah, we can't make a bearish case, none whatsoever. But these are just little things. It's always good for a trader to kind of just keep his eye on these two little indicators that we mentioned, because they can a lot of times get your profits, and be safe on the sideline, if nothing else. If you're not a short seller, that's fine. But it can help you thin out of winning positions, that's for sure. And I did the same thing, been doing the same thing Steve has. I've
just decided to kind of rest on my November laurels and see what happens in the next 2 weeks here. Some crazy stuff happening. And also, I've been in those down drafts where you're overloaded, the market gap's down 2% and you can't even get out fast enough. Those are no fun at all. And I'm just not in the mood to spoil my good November. I'm not predicting it. Again, I'm not predicting it, but I'm just seeing some weird little gyrations out there that make me just say, hey, let's just pull back a little bit for so many reasons. For so many reasons. All right, that's all I got really for the market.
All right, let me take it over.
Talk about.
Sure. Let me grab it real quick. And some interesting stuff today. I noticed, well, first of all, let's pull up the SPYs and see what Holly had to work with today, because we know up until this point, and until things change, Holly gets out of every position at the end of the day. So typically it's very tough on her when you do have a big gap up in the market, especially when you have a big gap up and it just flops around, goes sideways basically, and closes in a doji. That's really all the intraday tape she has to work with. So she has to try to figure out ways to squeeze profit out of this. But if you were just watching the channel bar over here today, you will notice that, because I want to bring this up, because a lot of people say, well, it's really not fair because you guys just post the best of over here. Well, let me show you something. taking a look at all these figures right here, they were all down on the day. That is based upon buying 100 shares of every alert that comes through there, comes through the AI today. Well, if you look at my screen over here, you're going to see that actually there were some nice profits to be made. Okay, these are the same stocks that you're seeing reflected over here as being down, substantially. But on my blotter, you're seeing a total different story. You can see here in moderate mode that using my share size parameters, you would have actually made $662. So let me explain why that is, okay? Because when you're just looking at the channel bar, you're just looking at 100 shares for every alert that comes through. Well, we all know, guys, if you're trading stocks, that are $4, stocks that are even $10, stocks that not a whole lot of small ones today, but you're going to be buying more size, right? You're not going to be buying 100 shares in most cases or shorting 100 shares of a $4 stock. Most people, they will ramp their size up on lower price stocks. So in this case, on this ORMP, let me put it back on my little thing here so I can click that in. You can see here, this was a $465 gain based upon 913 shares. And you may be asking, why did you choose 913 shares? Well, you can set these parameters, and some of you guys who maybe just come off the test drive, you may not know this, but you can set these things if you go to Tools and Options, and you find the AI trade size. You're going to see an option that's called risk based on stop loss. So basically, what I'm telling the algo to do is, if it goes to the stop, I want to lose $200 and no more. Okay. So what the algo does, it goes out and buys you the number of shares, and you can actually set this up in our Brokerage Plus as well. The same share size strategy. So in this case, right, it went out and bought 913 shares. Now, if the stock would have got stopped out, I would have lost $200, as you're seeing down here reflected in every one of these trades right here. Okay, these all stopped out, and it's pretty much exactly at $200, give or take a few cents, based upon slippage and things like that. But I wanted to point this out because you can see here there's some really decent trades today, had you been playing normal size and not just 100 shares per trade. Because I mean, I'm not going to trade 100 shares of a $100 stock then trade 100 shares of a $3 stock. It's just not going to happen. Okay, so I just wanted to bring this out because it's not as bad sometimes as this look. You can see right here, once again, $662. A couple of good trades. I just mentioned this ORPA. That was a great little short there today. This edit long was a tailwind, which actually waited for the pullback, and there is your entry. Okay, and then really no pain in that.
Writing, yep.
Yep, just kind of rode the 15 period, and then there you had your break, and then at the close there. But nice little trade there if you held to the close. Another one right here is a long called quarterback. As a matter of fact, somebody wrote in here, and Steve may have answered him, but if not.
Yeah, I'll give them that one too. That would be an intraday one.
Yeah, looking for a pullback alert, but send an email to info@trade-ideas.com. We'll give you some alerts when it comes to looking for pullbacks, whether you're looking on a swing trading time frame or a day trading time frame. But once again, this sci-fi was another nice little long one. You can see this was kind of a range break. Once again, no pain trade, just went through and then held it to the end of the day. You would have accumulated $336 at the close. So that's what's great about the AI. This is why we love. This is why we love profit mode. Okay, because profit mode adheres to the stops. It's going to get you out. Okay. It's going to adhere anytime there's a stop, and you're going to get out for whatever you set your risk parameters at. But it lets the winners keep running, okay? And then that way you can kind of manage them as long as they're working for you. You can work them all the way to the end of the day. You can look on my blotter there, and you can see it's about 50-50 split, winners and losers. But It's all about managing your risk, cutting your losers and letting your winners run, and that's how you obtain P&Ls like that. Nothing, to write home about. Not a bad day. I think that the majority of traders would take this every day and be happy. But anyway, that I just wanted to point that out because I see this often when I'm looking at my blotter versus what you're seeing over here in the channel bar.
Yep.
All right,
Agreed.
I'm going to take it back to Steve here.
Okay.
Unless you had something to add,
No.
Steve. Okay.
No, I just agree. You look over in the channel bar, it doesn't really tell the story.
Mm-mm.
Somebody was asking me if we use the AI for, I glanced at it and kind of see what it's doing, but neither Andy nor myself really use it for our repertoire and our method. We're swing traders, and we've programmed the trade ideas scans to show us what we really want to see. I'll be honest with you, AI is a great entree for newer traders that the hardest part sometimes is selecting the action, finding the right spot, finding the right things, and then having some roadmaps on them. That's really what the AI is there for. To answer your question as candidly as I can.
Sure.
Am I on now? Yeah, I guess I am, right?
Mm-hmm.
Perfect. All right, so let's get into the trade of the week. This one is, again, dovetailing from kind of the crazy alternate energy and electric vehicle craze that happened last month, but a little different angle. This is a mining company that does rare earth mining to build the batteries that apparently we're going to need to shove in all of these new vehicles and things that are coming out. But this was not my first pick. One of the first picks I wanted to look at was the same space, and it was a chart that Chris had been talking a lot about, and kind of talked myself into it because let's just go back a little bit in the time machine. There it is, really nice consolidation. But again, this one has also kind of run from $8. This one's doubled. I got to try and remind myself, one, stocks that have doubled in the last month, how much more room do they really have on them? Well, here we go. This is what started the whole thing for my bigger market analysis. Michael over the weekend said, well, that's a good sector, but do you really want to take a look at something that's diverging? And since we already learned about diverging, let's take another trip down. Price making newer highs, higher highs, RSI peaking out, lower peaks. That's all I needed to see. And that was the moment at which I said, wait a minute, this is kind of like the S&P. What does the S&P look like? Because I don't have this on my chart, as you know, but I will pull it up just for these types of reasons and these weekend study periods. I will do that. So that one was kicked out the window. And where are we going? Edit, remove. That one was kicked out the window. But in the back of my mind, I had been studying this WR, same kind of a thing. So big move back here as the whole thing started, settled in, and beautifully grabbed that 50-day moving average. Wonderful pop up here, and then it dumped a secondary. It couldn't even wait to dump its secondary, but the secondary didn't, actually no, the secondary was right here. My bad, excuse me. Moved a second push higher, secondary right here, and bled a little bit, and this is where it caught my attention. Boom, boom. Picking up the 10-period moving average. People who've been around and heard me talk in some of my webinars, the bird in the hand trade. We have a scan for that too that we'll take a look at in a minute and we'll share that. But this was just screaming bird in the hand trade on a sector that's been hot and prior showed some strength. It's not dying in the wind. The moving averages are propping it up. Honestly, it wasn't on any scan. There wasn't a trade ideas scan that I could point to. This was pretty much a discretionary week here in the trade of the week. Yesterday gave us a perfect entry, not a lot of slippage, hardly any gap at all. Let's take a look at the intraday because here's where it gets interesting. Okay, so there's our entry yesterday at 5. It was going to be at 590. Actually, it started below our entry, which is always welcome. Started at 591 and pushed through 598. A big move higher, and then the buyers said, yeah, we're for real, and they started buying this thing all into the rest of the day. Beautiful gap up, and at one point this thing was up about 25%. And this is where I'm going to, keep it real with you. I totally screwed this up. I don't know what I was thinking. I can tell you what I was doing. I was completely preoccupied when my friend Brian Shannon this morning knocked on my chat window and said, hey, you do see that anchored VWAP, don't you, Steve? And let's talk about this. This is a new indicator that I'm starting to warm up to a hell of a lot. Brian showed me the wisdom in it. And when I start to see things like this, let's transpose this over. We can't transpose that, but you can see it's the top of the wick. As soon as this thing busted through the anchored VWAP from the high, the sellers and the algorithms kicked in and got a hold of it and didn't let it go. Where I'm just really upset with myself is that I didn't even think about taking half off the table here. I didn't think about looking at it. Again, I was preoccupied. We're doing a lot of stuff here and for other responsibilities in the morning. Had I seen that, I would have taken it off. But here's where it gets funny. Here's where I screwed this thing up. I mean, a couple things. Let's zoom in. Let's go back to the regular look, because I think we all agree hindsight was 2020. Selling on the open was a great idea. But first thing that kind of threw me off, this perspective. You know, when you see this move, and then, yeah, that great little pissant move there. Yeah, that doesn't feel like 25%, Steve, but it was 25% and you didn't take it. Normally, I'm looking to take profits around 10. I don't know what I was thinking. So average VWAP came into play. Okay, look what happens, Andy, if you change the perspective and look at it like this, right? It seems to be like a much bigger move. If I'd have been looking at that in a much better perspective, I might have been more apt to jump up here and take some off the table, at least a half, for God's sakes. Okay, so then we
Yeah, that huge move it had a few months ago really threw everything out of perspective.
It messed with my head.
Yeah.
I wanted to hit on that, and because it really messed with my head. 25% is a move I should be taking every single day, at least half off the damn table. So got into the middle of the early morning here. I'm like, oh, geez, I missed it. Okay, well, here's what I also want to say. Coming into this trade, I'm a fool with greed right now, because coming off last month, seeing clean energy and all these ride and all these crazy intraday moves, I'm like, yeah, I want my 50% move today. I've been spoiled. We've all been spoiled, and it comes, to what I was saying earlier about be careful when the market gets too easy. You'll start doing sloppy, stupid things and making silly mistakes. There's absolutely no reason I shouldn't have gotten half off up here. So then we fast forward into the day. Here's the third mistake. You guys all hear me say, once the 15-minute candle breaks momentum, and I might add, how many of you heard me say day and a half? There's day one. Half a day is our giant gap, or not the gap, but a big push right into the anchored VWAP. Everything just did exactly what I've talked about and talked about and talked about, yet I just totally found a way to screw it up. And I don't mind telling you guys, it's just the way it is. So I should have gotten out right here. I could have minimized all of this pain. So now guess where I am? I'm like, okay, well, I'm not going to sell. I'm still in the money. This blue line down here is my, if I type WWR, you can see it. Or actually, trust me, I'm in the money. Where is it? Yeah, there it is. So if I go to WWR, which is mirrored, there we go. I'm right on the moving average. It's just sitting right there. So now I'm like, okay, I'm just gonna let this thing work. House money. What it probably wants to do, if you were like me and didn't get anything off today, it's probably going to want to chop. I think it's going to want to chop around maybe sideways for another day or two. When you look at that wick, the way it popped up like that, and in hindsight, at the end of the day, that was it. It made its move, and it's over. And we're probably going to have to wait for it to reset. In the meantime, if the market falls apart, that's not going to help. Hopefully, the market doesn't fall apart. I don't want it to, but we'll see what happens. But that's how I took a great entry for a day and a half and botched a 25% profit. And hopefully you guys did a little better than that. But I'm seriously blaming the fact that November was such a crazy month that it just skewed all of my expectations and made me become sloppy. There's just no other way to put it. So pretty sure that's all the stuff I wanted to talk about as far as the trade of the week. Unless Andy wants to add anything. Did you trade it better, or did you even trade it at all?
No, I totally missed that one. I was, I would think it's one of those things where I think I missed it the last time you traded it, and it's one of those kind of things. Once I miss my move, I don't like to. Right. I don't like to chase.
Yeah, I get that.
Mm-hmm.
Okay. How long do you usually hold the trade of the week, Brock? In hindsight, it should have been a day and a half. When it gets up 10 to 15%, you gotta start taking some off the table and getting in profit taking mode. I'm just fully in greed mode. Mea culpa. I just wasn't thinking straight because I was just being greedy and stupid. But ideally, we could position ourselves for 2 or 3 days, Brock, and nothing happens. Then all of a sudden, boom, we get day one, big green candle. That's when you start the countdown. The next day, if you get a giant gap up, take it. You know, if you don't and it trades higher in the early morning, try and get out as much as you can before lunchtime, because it seems like a day and a half, as illustrated perfectly here by the move in WR, and the smart people who were up 25% realizing I should just take that, started to get out, and that was the moment it broke right there. It took half as you intended. Kevin was on the ball. Kevin did half. He's been listening to me, not my ego. Can you explain the function of the anchored VWAP? Sure, Randy. The anchored VWAP is a point in time. You use a gap up or a gap down earnings reaction, a high, a big low, just big points of interest, highs and lows and gaps, and they work well on IPOs too. It's just a value-weighted VWAP anchored from that point in time. So you can say everybody that bought these great earnings on that gap open are barely above water now in the VWAP as the price gets closer to it. So you're just anchoring a point in time to try and corral the mentality and the psychology of the masses based on that time frame. It's a great concept, and I'm warming up to it all the time. So, all right, I think we're caught up here. The time interval from the candle I'm using is a 15-minute. Yes, 15-minute candle, Dylan, and I'm using a 20. I'm sorry, you type 20. 15-minute candles with 10-minute simple moving average is the most simplest, easiest indicator I can find. All right, so coming into today, stocks like Ride, stocks like Peloton way back in the day, stocks like some of the ones we've called as of recently. I'll have to go back and look at some of these names. They're escaping me. Hog, they came off the A table. And then I took it a step further because we realized that people have newer traders having smaller accounts like to focus on stocks under $25. So most of the scans from the last few trades of the week, lithium was on this one as well, but again, I passed on it. It was on that one for a while, but this is an interesting scan because we're only looking at stocks under $25. Using our stock composite proprietary rating of 80 as the minimum score. That's going to give us the B students and the A students as far as what a good daily chart looks like. And the secret sauce to this one is the short float. If you can find something with 20 or 30% short the float with a high stock composite rating, that's a pretty good recipe for a short squeeze. And then there's your average daily volume. So let's do this. I'm going to go through them one by one. Let's just turn off my alerts. We'll delete these, and we'll go through them individually, kind of like how I would on the weekend. The ones at the top here are going to have the most short float. And I'm going to zoom out a little bit because remember, I kind of want to see things that haven't run too much. So there's going to be a few diamonds in the rough here. We're looking for things that have consolidated and haven't run too much. Oops, hang on. What the heck just happened? That was crazy. All right. Any idea why that's doing that, Andy?
Wow. It won't stop?
No, look at that.
Oh, wow, what the heck?
I click on something, what the, okay, here's what we do. We just say, oh my God, look at this. What the hell's going on here?
Well, did you download the new developmental?
No.
Oh my gosh.
Look at this, I can't even get control of my, look at this stuff. This is really weird. My computer is just going like crazy right now. Wow.
You may have control alt delete. I don't know.
Yeah. I must have done some. Is there? There it is. Who was that? Rakesh. Must have been the coffee I spilled in my down arrow key a few weeks ago. So smart. You guys are so smart. Yeah. You guys are so smart.
That's what it was.
Here we go. Let's start the scan. As soon as it unfreezes, though, I think I've got a few commands in there probably. Hang on a second. There we go. All right. That's had a pretty good run, but that's not bad. That's not bad. I'm going to go ahead. I'm going to mark this one because it's got a high short float of 43%. Pretty obvious shelf right there. We will mark that up as something of interest. No, you got to pass on things like that. They they're blow off tops. That's a 3-day reversal there. That's a reversal. That one bled through. That's a great example too. I showed this one earlier. That was a good example 2 days ago. But once it bled through and closed below, couldn't close above again today. It's in no man's land. I'm not interested in something like that. Let me zoom out a little bit more and get some more perspective here. Fit. I don't know why that keeps showing up. Kirkland was interesting a few days ago. Okay, this is getting interesting. All right, so 20 period might have something to say about that. The next time this one gets above 12, that one could be interesting. And it looks like it's got about 19, 20% short the float. Here's the blockchainers. Now, these are very, very volatile, and I wouldn't chase something like this, not to mention you have overnight risk in the blockchainers. The CORT looks very interesting. Must have had, yeah, it looks like it had, nope, earnings are way back there, but it had a big gap up, sideways action. It probably wants to touch that rising 10 period moving average. We could keep an eye on it up there. All right, AEO, oh, I like this one. This is another one of these retail stocks that looked like urban too. No, I'm sorry. I'm not supposed to type it that way. Let's go ahead. Nice 3 or 4 day pullback. Look at how it kissed that 10 period moving average. We'll just come in here and pop in right at today's high. A possible move higher on that one. Here's Callaway. Now we're getting down to more of the bottom of the barrel stuff. Oh, there's my friend X. Ooh, that looks really nice. That's Sirius Satellite though. This thing is a $1 billion float. I mean, you're welcome to buy 10,000 shares of it if you want, but it's a really nice looking chart. Who knows? It'll be an acquisition, but that's a nice looking chart. CLF won't chase those. Getting to the bottom of the barrel here, but still looks interesting. I don't know what that is. Hostess, Twinkies, huh? Jeez. I'm gonna pass. All right, so not much really left here. Let's move to the next one. The next one that we've been using to get off of, or to find symbols is the revenue growth fishing. This is one that Andy came up with a while back. Let's look at the configuration of what we're looking for here. We are looking for stocks over $5 that average 500,000 shares, position in 3-month range. Well, this is going to assure us that these are not stocks that have doubled. And it's the reason he's got the word fishing in there, because these have been beaten up. They are no more than 30% off their off their 3-month low. So they're pretty close to the 3-month low of their range. They've got quarterly growth of at least 17%. So they actually grow quarter over quarter. There's no reason they should be continuing a downtrend, you would assume. And then the same thing, position in 10-day range. We're looking for something much stronger. Now, in the last 10 days, the stock has to be in the 70th percentile or higher. So 2 different time frames, very powerful filter. And when we do that, we will see things that look, oh, AU, interesting. So we're going to see things that are in a downtrend, but are trying to move out of a downtrend. And what I'm specifically looking for these is something that's not just butting up against its critical moving averages. Every now and then you'll see something that's, yeah, we're not seeing anything in there today, but for people who are looking for strong companies that might be looking for growth, we'll hand those out at the end. So there's nothing really to set as an alert on that one. Lastly, I've been using this one a lot. It's called Above All SMAs. And I found a couple of the trades of the week on this scan as well. And again, don't try and pin me down as to which one. I'm going to share all of them, Randy, and I'm going to share the alerts that we're setting as well. So you'll leave with all the fixings. Filters, okay, $5 and above. Let's hide the unused so we can see. Earnings per share, that just means the ETFs are not going to be in there. All right, so it's got to be at least above the 10-day moving average by a penny or 0.01%, but no more than 4%. I'm trying to keep things that are not parabolic. The 5-day range, that just means the range should be somewhat compressed, no more than a 10% range from the 5-day low to the 5-day high, maxed out at 10. Change in 5 days, I don't want it to, for whatever reason, I've got 0 as the max, so I don't want it going up that much. Trying to find things that are compressed, and this is the way I was using the filters to try and compress them. And then we've got the simple 200-day, 20-day, and 50-day, all of these, including the 10, brings the title above all moving averages. So let's see what this brings us as far as a visual. That's pretty nice looking. I like that. Pharmaceutical, if we're into pharmaceuticals, but we'll go ahead. Now we'll remind people that when you set a price alert, you can also remind yourself it's a pharma stock in the notes section. LB, oh, I like that too. L Brands, another retail. We've seen some really nice retail. URBN, as when Andy's been stocking, it bled through and found the 20. But LB, look at that, big gap up, pulled back, and it found the 10 period. I like that. Let's just take it above today and yesterday's high for possible follow through. CLGX, yeah, that one's not really jumping out. That one's not really jumping out to me either. Yelp, we all know Yelp. I'm looking for consolidation. That's not bad. BOL, Ball Corp, metal can manufacturing, $96. GPK, graphic packaging. Well, packaging's been very interesting lately. Everybody's buying stuff online. That's a pretty decent chart. I will just go in and mark that up. 2 more, and then we'll hand these out. And that's about it, really. So let me just take a moment to call your attention to the chat window. I'll drop these scans in there so you guys can have them. I'll also drop the price alerts that are in there. They'll be active for you as well. And when we do that, we can bring Scott in. While I'm doing that, you can throw a couple chart requests if you want in there. I'll just get busy here for a second, doing some copying and saving and dropping in the chat window. So the first one is A Table Junior. The second one was revenue growth fishing. And then above all SMAs. And lastly, the price alerts that I set. We can share these as well. Share, copy, and price alerts. All right, lots of parting gifts today. Bring Scott in a couple minutes. Morris wants to look at Boot. As soon as I can get my system unfrozen, we'll look at Boot. We'll look at Tesla. Anybody else, if they have a couple more, we'll take a couple more. Boot, not bad at all. Again, Boot Barn, we were talking about the relative strength of the retail lately. A lot of retail names seem to be looking pretty well. We'll say it's doubled though. It's had a nice gap down here. It's doubled since then. Let's, just for fun, let's do what we did earlier. Let's pull the eyes of the RSI up and see if there's any divergence up here. Seeing a little divergence. You see that?
Mm-hmm.
Start to lose faith in these ones that have had a nice 100% move and they're running out of airspeed. So I'll just give you that caution. If it can build on that, great. If not, yeah, use caution. Let's get rid of that. Let's see, who else? Tesla added to the full weight of the S&P, looking really good. It's, in my opinion, it just wants to do this for a little while probably.
Wait for the fast line.
Waiting for the fast line to catch up. All right, we'll do Alan. It's in the chat window. Just open the little triangle and the GoToWebinar floating toolbar, and you'll see the chat window. It's all in there. All right, we'll do 3 more, eBay, LVS, and TSCO. The first one was eBay. I like the company. It bounced off its 200-day. It's getting ensnared by the 50. I'll tell you what, the most strongest thing eBay could do is post a close back above that blue line and try and recapture the health of the stock. I see no reason why eBay doesn't do better. I use it a lot for buying and selling. It could go either way here. It doesn't look bad. All right. Oh, look at the RSI on Tesla. Dave's telling me to look at the RSI on Tesla. Why not? I'll just leave it up this time. I won't keep deleting it. Yeah, I mean, from there to there is a long stretch. It's a bit of a divergence, but boy, you know, Tesla's a friggin' juggernaut, and it's being moved into the S&P. It's a tough one. LVS, nice looking chart, really nice consolidation above all its moving averages. I like that one. I do like that one, and I would probably, you know, if you're not in it, just put a high, like I'll do right there. You know, mark it up from today's high and see if you get a price alert tomorrow. Last one, then we'll bring in Scott for some announcements. Dylan for Tractor Supply Company. Yes, still Tractor Supply Company. You know, this one got ensnared a little bit, and it's trying to work its way through 2 days, including today. It's closed above the 50. We want to see stocks that are above the 50. They're in good health. Stocks that are below the 50, they're in suspect health, just in general. 200 days probably a better, you know, better way to put that in terms of health. But what you want to see is this 200-day be resolved. You're above the 20, you're above the 10. Maybe 2 or 3 more days. What could happen is these guys could kind of sneak up under the rear and kind of force the issue. That's what you're going to want to see. You don't want to see this thing drop back down below under the 50 again, and see what happens there. All right, that's all I've got for you guys today. If you need anything, just info@trade-ideas.com. If you're watching on the replay, we'll have those cloud links available to you. You can just email that aforementioned email address and we'll get them out to you. And that's all I've got. So let me bring the slides back up for Scott.
Hey, thanks, Steve. Thanks, Andy. Yeah, a couple things on the way out. Make sure you grab this ebook, the earnings ebook, before we replace the slide with our new ebook that we'll kind of bring out for everyone real soon. It's all ready to go. So the earnings ebook has some great examples of how to use earnings season to your advantage. Just go to trade-ideas.com/earnings. It even has some cloud links so you can import directly into your layouts and make use of the author's strategies. The podcast, search for Trade Ideas Podcast wherever you listen to your favorite pods, and search and add us as a subscription. We did just release a new one on Monday. It's an interview between our Sean McLaughlin and a new team member, Chris Farley. So check that out. It's a great introduction to Chris, and you'll be hearing more from him soon. There's a code, Holidays. Saves 15% off any subscriptions, first installment. You can also use this to upgrade from standard to premium and save on that first installment of your upgrade. You can follow Steve on Twitter @TodayTrader. There's also @TradeIdeas and at QuantBot and some other handles you'll find. If you follow @TradeIdeas, you'll find them all. Trade Ideas Pro is the Facebook page to find, like, and share the content with your friends. And whenever you have any questions, always send them to info@trade-ideas.com. That goes into our help desk software so it doesn't get lost and gets you the answer quickly. So we're going to have this recording up later on tonight or tomorrow morning. You'll get an email reminder tomorrow about how to find it. Thank you, Steve, Andy, and all of you for joining us. Have a good one.
See you next time.
Thanks, everybody. I'll see you on Thursday. Bye-bye.